It was supposed to be a new beginning, a leap forward into a brighter future. Instead, for thousands of investors, it became a financial nightmare, a digital rug pull that unfolded in plain sight. On October 29, 2025, the Solana-based token, LAUNCHCOIN, once a promising player in the volatile world of cryptocurrency, experienced a catastrophic collapse. In a matter of hours, its value plummeted by nearly 99%, a brutal freefall that wiped out over $80 million in market capitalization. The event sent shockwaves through the crypto community, leaving a trail of bewildered and furious investors demanding answers. What went wrong? How could a project with such a dedicated following implode so spectacularly? To understand this digital disaster, we have to go back to the announcement that started it all, a decision that would ultimately seal the fate of LAUNCHCOIN and its holders. The story is a complex web of ambition, flawed execution, and a fundamental clash between a project's vision and its community's trust. The catalyst for this financial calamity was a decision made 2 weeks prior. On October 15th, the team behind the Believe app, the ecosystem that LAUNCHCOIN was built to support, announced a bold and, as it turned out, fateful plan. They were initiating a migration, a complete overhaul of their tokenomics. The existing LAUNCHCOIN token would be retired, and in its place, a new token, aptly named Believe, would rise. The migration was framed as a necessary evolution, a strategic upgrade designed to fuel the long-term growth and sustainability of the Believe platform. The core of this change involved a significant expansion of the total token supply. Where 1 billion LAUNCHCOIN tokens had once existed, the new ecosystem would be powered by 1.33 billion Believe tokens. The team explained that this 330 million token increase was not a dilution for its own sake, but a strategic reserve. These new tokens were earmarked for critical ecosystem initiatives, funding development, incentivizing user engagement, and providing the necessary resources to build a more robust and feature-rich platform. It was a forward-looking plan, a bet on a bigger, more vibrant future. From the Believe team's perspective, led by its young and charismatic founder, Ben Pasternak, the migration was a logical and essential step. They saw it as cutting away the limitations of the old system to embrace the potential of the new. The mechanics of the swap were presented as straightforward. Existing LAUNCHCOIN holders were instructed to migrate their tokens to the new Believe contract on a one-to-one basis. For every 1 LAUNCHCOIN an investor held, they would receive 1 Believe token. The team set up a dedicated portal and provided instructions, urging the community to complete the swap before the announced deadline. On the surface, the process seemed simple enough, and the initial response was overwhelmingly positive. The project had cultivated a loyal following, and a significant portion of the community placed their faith in the team's vision. By the time the deadline arrived, the Believe team reported that over 85% of eligible holders had successfully completed the migration. They had followed the instructions, swapped their old tokens for new ones, and were ready to embark on the next chapter of the Believe journey. It seemed like a successful, albeit complex, logistical maneuver. However, beneath this veneer of success, a critical and devastating flaw was lurking. The migration plan had a glaring blind spot, a fatal oversight that would prove to be the undoing of many. While the announcement focused on the one-to-one swap for individual holders, it failed to adequately address the fate of a crucial segment of the market, the liquidity providers. In the world of decentralized finance, liquidity providers are the lifeblood of any token. They deposit pairs of assets into liquidity pools on decentralized exchanges, enabling others to trade the tokens smoothly. In return for providing this essential service, they receive LP tokens, which represent their share of the pool. The Believe team's migration plan did not include a clear, automated, or even well-communicated process for these liquidity providers. Furthermore, the plan also overlooked the remaining 15% of holders, those who, for various reasons, had not completed the swap. Perhaps they missed the announcement, were traveling, or were simply less active in the day-to-day chatter of the crypto world. For them, the deadline passed like a silent guillotine. When the switch was flipped and the old LAUNCHCOIN contract was effectively abandoned, their assets were left stranded. Their tokens, once valuable digital assets, became worthless relics of a defunct contract. The liquidity pools, which had once provided the foundation for the tokens market, were drained and abandoned, leaving anyone who hadn't migrated with nothing. The immediate aftermath was brutal and swift. As the market processed the reality of the situation, that a significant portion of the token supply was now inaccessible and effectively burned, panic set in. The value of the now obsolete LAUNCHCOIN token went into a death spiral. Traders who still held the token rushed to sell, but with liquidity gone, there were few buyers. The price chart became a vertical red line, a horrifying visualization of wealth evaporating into thin air. The token plunged by 99%, its market capitalization collapsing from over $80 million to practically zero. The dream of a smooth upgrade had turned into a public execution. The community that had once been filled with optimistic believers was now a chorus of rage and despair. The project's social media channels, particularly X, formerly Twitter, became a digital war zone. Accusations flew, with many investors decrying the migration as a poorly planned disaster at best and a deliberate, cynical cash grab at worst. The hashtag LAUNCHCOIN trended for all the wrong reasons, a testament to the scale of the financial devastation. In the face of this intense backlash, founder Ben Pasternak took to social media to defend the team's actions. He maintained that the migration was not a mistake, but a necessary upgrade. In a series of posts, he argued that the old tokenomics were holding the project back, and that the move to Believe, with its expanded supply, was crucial for creating a sustainable system of platform incentives. He framed the losses of non-migrators and liquidity providers as an unfortunate but unavoidable consequence of a difficult but essential decision. Pasternak's defense, however, did little to quell the community's fury. Many saw his explanations as dismissive and lacking in empathy for those who had lost their savings. His arguments were further undermined by a torrent of on-chain data that began to surface. Crypto sleuths and disgruntled investors started digging into blockchain explorers, tracing transactions connected to the migration. What they found added fuel to the fire. Allegations of insider sales began to circulate, with transaction data appearing to show wallets associated with the team or early insiders selling off their tokens just before the migration was announced or during the chaos that followed. The narrative quickly shifted from one of a flawed migration to one of potential manipulation and betrayal. The execution of the migration itself also came under heavy fire. Critics pointed out numerous flaws that went beyond the core issue of stranded liquidity. The communication was widely seen as inadequate, with crucial details buried in blog posts or Discord channels, making it easy for less engaged holders to miss the deadline. There was no grace period, no safety net, and no apparent contingency plan for those who failed to migrate in time. It was a hard cutoff, a digital point of no return that seemed to disregard the real-world circumstances of a diverse and global investor base. The team's failure to establish a clear and secure process for liquidity providers was seen as a particularly amateurish mistake for a project of its size. In the fast-paced and often ruthless world of crypto, trust is the most valuable asset, and the Believe team had seemingly squandered it. The launch of the new Believe token was meant to be a moment of triumph, but it was irrevocably tainted by the destruction of its predecessor. The team announced that proceeds from the launch of the new token would be used to fund buybacks and add liquidity to the new Believe pools, an attempt to stabilize the new ecosystem, and perhaps to make amends. But for those who had lost everything in the LAUNCHCOIN crash, these measures were cold comfort. The saga of LAUNCHCOIN and Believe serves as a stark and painful lesson for the entire cryptocurrency space. It highlights the immense risks inherent in a decentralized and largely unregulated market, where a project team's decisions can have immediate and devastating financial consequences for its community. The story underscores the critical importance of transparent communication, meticulous planning, and above all, a developer's duty of care to their investors. A token migration is not merely a technical process. It is a renegotiation of trust between a project and its community. In this case, that trust was shattered. Whether the Believe team can rebuild from the ashes and make the Believe token a success remains to be seen. The shadow of the LAUNCHCOIN crash will loom large over their future, a permanent stain on their reputation. For the thousands of investors who were wiped out, the experience is a brutal reminder of the high stakes of the crypto game, where fortunes can be made in an instant and lost even faster. Their losses are a somber monument to a plan gone horribly wrong, a cautionary tale written in the unforgiving language of the blockchain.